Welcome, Achievers! Today, we're going to take that overwhelming, deep-in-your-gut stress of mismatched accounts, and we're going to turn it into an absolute piece of cake. Listen, if you want to run a truly high-performance business, you absolutely need total financial clarity. Because think about it, right? When you don't know exactly where your money is, you can't scale, you can't grow, and honestly, you completely lose your peace of mind. But that stops right here, right now, with this explainer on mastering the bank reconciliation statement. I am so intensely pumped to bring you this knowledge today because mastering your money, that is the ultimate high-performance habit. Okay, let's dive right into this. We need to talk about the ultimate frustration literally every business owner faces. You open up your accounting software, you look at your balance. You feel good. Then, you log into your bank account, and the numbers are completely different. Think about that feeling, the terrifying bank mismatch. Your heart just drops, doesn't it? You immediately start wondering, did I make a massive mistake? Was I hacked? Where did the cash go? It causes immediate, paralyzing panic. But today, we're going to eliminate that fear entirely.
Here is the exact high-performance framework we'll use to master this concept and gain absolute financial clarity today, my friends. We're covering 1. The great mismatch. 2. Cashbook versus Passbook. 3. The bank's point of view. 4. Why differences happen. And 5. The BRS blueprint.
Section 1, the great mismatch. And Achievers, pay attention to the subtitle here. Don't panic, it's normal. We are kicking things off by just completely stripping away the anxiety. An account mismatch is totally expected. Both of the core sources we're breaking down today emphasize this massive point. It doesn't mean you made a huge error, and it definitely doesn't mean your money evaporated. It just means we have a little bit of reconciling to do. So let's look at exactly how we do that. Look at how stunningly simple this definition actually is. The BRS, or Bank Reconciliation Statement, is literally just a document prepared to reconcile, meaning to match and explain, the differences between the bank balance in your cash book and the balance in your passbook. Please, whatever you do, do not look at the BRS as some tedious chore. I want you to look at it as your ultimate high-performance tool for checking differences, taking back total control of your business, and securing your peace of mind. At the end of the day, it's just adding and subtracting. Moving to part 2. Cashbook versus Passbook, a tale of two records. Now, to find that absolute clarity we are striving for, you have to understand the two entirely separate books that tell the story of your money, because you simply can't reconcile what you don't understand, right?
Imagine this. You're holding the cash book in one hand and the passbook in the other. Your cash book is prepared by you, the business. It tracks all your cash and bank transactions. It is your reality. Then you have the passbook, or your bank statement. This is prepared by your bank, maybe it's HDFC or SBI, to track their customers' transactions. It is their reality. One is your view, the other is the bank's view. You've got two different books tracking the exact same money, but from completely different sides of the table. And guess what? This is exactly where the friction happens.
Section 3, the bank's point of view. This right here, this is the ultimate mindset shift. Achievers, listen to me very closely right now, because this next concept is the massive mental shift that makes all the confusing accounting rules instantly snap right into place. If you get this, the whole concept becomes an absolute breeze.
It all comes down to the rule of opposites. From your business's point of view, the money you deposit is your asset. You own it. And the modern rule of accounting says when an asset increases, you debit it. But flip it around. From the bank's point of view, that exact same money is a liability. Why? Because the bank doesn't own your money. They are just keeping it safe. They're holding it for you. They actually owe it back to you whenever you demand it. So, for the bank, when your balance increases, their liability increases. And liabilities, my friends, are credited.
We all know this feeling so well. You get that joyous SMS from the bank. Your account has been credited with 5,000 rupees. It says credited because their liability to you just increased. It is the exact opposite of what you do in your cash book. When you fully, truly grasp that your debit is their credit, you have unlocked the metrics. You have the power.
Number 4, why differences happen? Timing is everything. So if we know the rules, and we know we're tracking the exact same money, why do the balances ever disagree at the end of the month? In one word, timing.
Let's rapidly fire through the main culprits. First up, checks issued but not presented. You wrote a check to a supplier, so you immediately subtract it in your cash book. But wait, they haven't cashed it yet, so the bank hasn't touched the passbook balance. Second, checks deposited but not cleared. You get a check, you add it to your cash book, but the bank, they need 2 or 3 days to clear it. Third, unseen bank actions. direct interest they add, or maybe penalties they secretly subtract without asking you first. And finally, automated software payments. Say you've got a powerful automation set up with Zapier to scale your business. Zapier auto-charges your bank account. The Passbook decreases immediately, but maybe your accountant hasn't updated the cash book yet.
I really want to highlight just how drastic these timing delays can be. 3 full months. Think about how crazy that is. Remember that a supplier has up to 3 full months to cash a check before it actually expires. You might have subtracted that money from your cash book way back in March, and that supplier doesn't actually pull it from your bank until May. This brilliantly illustrates why these timing delays aren't just a possibility, they are practically guaranteed to happen.
Section 5. The BRS Blueprint, your formula for success. We've diagnosed the problem, we absolutely know the rules, and now, my friends, it is time for the solution. This is where we take massive action. The golden rule of this entire blueprint, as shared directly in our sources, is brilliantly simple. We will always follow the Passbook. When we sit down to reconcile, the Passbook is our destination. We aren't doing this to prove who's right or who's wrong. We are doing this to match. We must adjust our cash book balance to mirror the absolute reality of what the bank says in the Passbook.
Follow these simple add and subtract steps, and you will align your books perfectly every single time. Step 1. Start with your cash book balance. Step 2. Add back things you incorrectly subtracted, like those checks you issued but haven't been presented yet. And obviously add any hidden bank increases, like interest. Step 3. Subtract things you incorrectly added, like checks you deposited but haven't cleared yet. And subtract hidden bank charges. Step 4. Boom! You have arrived at the exact Passbook balance.
I want you to get physical with this right now. Our sources suggest a brilliant technique for this. Visualize it with me. Come on, put your hands up. Let your left hand be the cash book and your right hand be the Passbook. If you issue a check, your cash book hand goes down. But the bank hasn't cleared it, so the Passbook hand is still high. Remember the golden rule? Follow the Passbook. So to make your hands match, what do? You add it back. You raise your cash book hand back up. Use your hands to physically represent the balances going up and down, and always adjust your cash book hand to match the bank. Mastering your money is the ultimate high-performance habit. You now have the mindset shift, you know the exact culprits of the mismatch, and you have the blueprint to solve it by simply following the Passbook. Financial clarity is business power achievers. So get out there and take control of your accounts today. Match those books. But let me leave you with this one final question to really ponder. If your bank accounts have been hiding this much disjointed reality from you, what other hidden financial leaks are silently draining your performance right now? Until next time, stay focused, stay clear, and keep achieving.